Hi and welcome to the Market Alert for Wednesday, the 7th of July 2021. So yesterday US stocks extend decline, wipe out Friday's gain. I think the market was playing catch up because obviously being closed on Monday, so factoring in a lot yesterday, but also on news as well. US stocks open mixed, and with the Dow lower, the S&P near unchanged and the Nasdaq higher, but of course ending the day lower, significantly lower. As here, crushed, the Fed continues to insist on exacerbating everything from asset bubbles to wealth inequality, while the larger rally continues to weaken underneath. It's a bit like a mountain covered in snow. At some point there's going to be an avalanche as the shifting snow underneath starts to move. As it says here before, larger volatility spike. There's a sense about this, and I've mentioned this in the market alert, and even yesterday I said it feels weak, and also that 89% in the Dow was a significant area. This was triggered by the ISM June Services Index, which came in far lower than expected. All news came in lower than expected, and you'll see that in part two when we look at yesterday's trading session. And as a trader from Goldman says here, in 18 years on Wall Street, I could not imagine typing these large numbers. I need to check them twice. Investors who are waiting for a dip started to move to market orders to start July, so they're not even waiting for a dip, they're just buying at the top. This gives the opportunity for the likes of the banks and everybody else to sell their profits and their positions to these people. The July money flows are strongest for the next 1 to 2 weeks as investors return from the long holiday weekend. They're called the sacrificial sheep, and this is how markets end when these people come in and take off the sell side for the traders. Simple as that. They buy, the traders sell. News for today. What have we got? We've got the jolts. Let's have a look. There we go. We've got economic forecast EU 10 a.m. Then we've got jolts. Jobs are opening, and then tonight we've got the FOMC, so it'll be interesting. So we could see a quietish morning for the DAX, but then given the level of volatility that it's increased by yesterday, I wouldn't be at all surprised. And speaking of volatility, let me just grab the volatility chart. So here you can see yesterday the implied volatility moving from 1392 on Friday to 1844. Massive jump yesterday. Certainly an increase, a significant increase there for the implied. Now this will need to move up to around 24 to show any sort of stop in the corrective phase that the Dow is putting at the moment. So let's just have a look at the Dow. As I mentioned yesterday, we were at a critical point here, the 89% retracement from here, drawn back to here. That gave us the 89%, and the market got to this yesterday and sold off because that's how it works. You'll see these all over the place, and I highlight a lot of these today in the second part of the alert as well. As to be expected, we get the initial bounce back to the upside. That's coming. It always is the case, and we'll get a retracement. So what I'm going to do is to draw twice or click twice at the top of this bar, and this will actually place the fib retracements to the upside. I'm just going to move these out of the way so you can see to see this, because I've got nothing else to mark back to actually project back to the upside this because of this low here. So if you just click twice on the top there, that'll give you the targets back to the upside. And what we're interested in is this one here, 34802 and also 34746. Both of these areas will be a crucial area just there. So we'll leave those there. You can see yesterday in the 30-minute Dow, I've got one somewhere, how the market just opened and down she went, hitting the 89% retracement, which is now yesterday's high there. Before moving lower, it just went from the open, and that was down to the ISM numbers that we saw. That just triggered it, and that sent the market moving to the downside there. And it was all the way down. As you can see, we've got 100, 200, 300, 400, 450 points down till we test. We get the demand coming into the market. Market comes back, it retraces 62%, and then they recover from this high to this low around 50%. Market making its way overnight, heading towards the DP, and needs to close above this in order to start moving back to the upside. But you could actually use this 30-minute chart to draw in your points as well from this high to this low. If you can't see it in the daily, you can use a smaller time frame, 4 hours. As long as you can see yesterday's high, that's the key. And there's the numbers there as well, taking you back to yesterday's high, which again reflects that 89% for yesterday's session. So worth doing this as well in a longer time frame. Allows you to step back and have a look, see what's going on there. In the DAX, the market is incredibly sideways, but the volatility is nice. You can see how much higher the volatility is through this period. You can see it a lot wider ranging bars than we've had in the up move to the left. So even though it's sideways, I don't mind this volatility at all. As long as this stays, this will be great. Again, we've got a same situation with the DAX as far as being able to project back to the upside. So 2 clicks on the upside there, if it'll allow me to do it. There we go. So there's again the 78 and 89 is the critical area for a move back to the upside that you've got to keep an eye on there. Also, though, saying that, I'm just going to remove that. You can do that, or you can come back to this high to this low as well. So from here to here will also bring you back to a very interesting area where there's the resistance where the markets move lower from here. So I'll stick with this one actually. Just notice that we have got that high and that low there. Now if the market fails to hold at the downside 89 where it traded to yesterday, I'll just remove this, and we go from this low to this high. We can get a projection to the downside as well of where we can expect some movement as well. So let me just get rid of that. They're the ones you want there. That's the numbers we're looking at on the downside. Get through that 62. If we have a bit of a move to the downside, watch the 15,457, and then you'll see the other ones then moving to this area as well, 78 and 89. Now let's have a look at again. Let's have a look at the 30-minute chart for yesterday, because again it gives us a really nice picture to see where prices moved. You can see that we had some weakness to begin with. Again, more details on this in part 2. The market retraced, and then the Dow opened, and it was just good night Vienna as the market moved to the downside. And again, you can see now how in this time frame the markets come back to again 78, 89. How it also on the upside needed another retracement from here to here, projected back to here, will also be a similar pattern there. And now again, if you were to go into this in a bit more detail, from here to here, you'll see the markets coming up to that 89 as well. It's amazing how it does this, but your eyes get used to seeing it, and it allows you to add another layer of trading tools and an edge to your trading. Again, I covered this a lot in yesterday's trade show and how I used it to project where the market was going to trade to, and in the last 3 or 4 market alerts to while I'm thinking about it. So that takes care of the bigger view. In the 2-minute chart, again we can see prices moving up a bit there. And we've also seen the targets in the 30 minutes. So I'm not going to hang around too much in the 2-minute chart. We're looking at the DP there. We need to get above this if prices are to move higher. The low is going to be crucial. We're not that far off that either. So any break through the low we'll see the markets come under pressure. As far as the upside is concerned, the high is going to be a long way off. As you can see there, it's 150 points to the high. DP is the first target on the upside if they do try and bring the market back. And finally, we've got the precious metals. And yesterday, JP Morgan and Co took advantage of the news as the Dow moved lower. They absolutely hammered silver, but it's coming back overnight, which is good to see. So we need to get back above the 38 fib so that we can get above that 26.50 level, but finding support at the 26 yesterday. Gold also came under pressure, but not until later on, which is interesting. And again, you can see that back up overnight, still above the 5-bar moving average in the daily charts. And the dollar, interesting pattern here as well. You probably spotted it from here down to here. It's going to be 89%. Let's just draw that in and you'll see bang on 89 where the market came back to yesterday, and now it is struggling at this level. And with a bit of luck, it'll start making its way back down here pronto. So it'll bring the silver price back to the upside. Okay, I think that's everything covered, what we could expect today, and catch up of where prices moved in the bigger picture yesterday. We certainly need to keep an eye on the bigger picture of where the market's trading. It gives you that edge when you actually trade on an intraday basis, and any sort of swing trading opportunity that you might wish to set up as well. Let's have a look at what happened during yesterday's trading session. So as I said in yesterday's market alerts, the DP area was a likely downside target to start with, and then you can see the buying coming into here in the pre-market future session before the cash market opened. And when this opened, it was quite a volatile opening, as you'll see there, with prices shooting down 37 points and then trying to find some sort of direction, and eventually continuing to move down to the S1 and then trading back there. You can see the shorts covering there as the volume increases. The range of the bar is less than the previous bar as well, so we know that there's some support going on there. We then get a rebound, which you can see there, and prices putting in 3 buying bars there. You can see them there as prices move higher, but also notice that they're starting to taper off as well. You'd expect to see an increase if prices were going to continue to move to the upside. The selling comes in at the DP level there, and then we're heading back down for a retracement. So let's just move forward, and you can see we've got prices retracing at 50% there with some testing going on. Prices hold for a moment or two, and then I've just drawn in from this high back to this low just to get an idea of the momentum back on the upside. And again, you can see prices struggling there, 62% retracement, and then prices moving back down towards that S1. Notice this price bar here is also narrower than the previous bar's range, and the volume is actually greater. Again, you can see some support coming into the market there, because if the volume is greater, you would expect prices to continue to the downside. So there must be the buying absorbing some of the selling coming into the market at that point. However, prices continue to trade sideways there, and again, you'll see that 78.89 area where the market finds support, with prices bouncing off this. We then see prices closing back above the 20-bar moving average, but they fail to hold. And again, if I just draw in this line here, you will see that prices have reversed. The volume is greater than the previous bar range, and also the volume is increased here, failing to move higher. It's got the DP there, and also that you can see just by looking across there, that is also going to be in the 89% retracement range as well. You just, as I've said before, your eye just starts to pick these out, and you can see them. Now this is interesting because the order's been filled here, and you can see we're currently trading at that 78.89, and just watch the volume through this area as well. So this is really important when you're in a trade to actually watch what happens. So we go down, We sailed through. In fact, I didn't think we would go into at this point, because we see again that increase in volume, narrower range than the previous bar. A lot of demand coming into the market there. But prices hold. I'm having a quick look at the daily chart. I can see them at the 62% retracement. That's a crucial area as well. So going back, I'm now looking for signs that they're going to reverse the market. And the only way you can do this is by using the psychological levels, the pivot points, but most importantly, the price action and volume will give you the first clue. It's real. It happens in real time, and you can see immediately there. Now, look at this. You've got this price bar here, which is tiny, and this huge volume. And now some of this volume, some of the other volume bars have had greater ranges, like this bar, for example, but with a range that's far wider. So here, immediately, I can see that there's some buying coming into the market. There's either profit taking or there's some new buying coming in. And at that point, I say thank you very much for the 40 points, and the market then starts to turn around. But now you can see this here. It's blatant, but you need to be able to read this in real time to take full advantage. So prices attempt to move up and manage to get to the 20 bar moving average, and then fail. And again, that's from here to here is around the 50% area. So again, just under the BRN, you can see prices once again starting to move lower. Now what I've done here is drawn in the retracement from here to here as well, just to give me an indication of how far this could go, or whether it's going to actually find support in this area. And if it does, again, I'll watch the volume and then make a decision. And immediately you can see at the 78 there, the volume is building, and we start to see prices reverse, and it's time to exit the trade just there. So the market is now going to get into a sideways move, because we've had the main event of the morning, the biggish move and the volatility, and now sideways. And this makes it very difficult. Again, we see prices moving up. We just get through the 89 there, and we've got this resistance to the left. So all the time I'm looking at these areas, and as soon as this starts to fail, I'm leaving the trade. We're closing back below the 5 bar moving average, and we could see lower prices. We've also got that news item that is going to be coming out shortly as well. So the last two trades, only a couple of points loss on the last one, even though there was a 10 point scalp, because I was looking to see if the market was going to continue and break through this resistance here, but it failed to do so. It needed to come back and then have another look at it. So the sell signal isn't filled, and then you can see how we've come back to that resistance once more. We need another shakeout. This sell signal isn't filled, and then we get filled on the upside. And this is a real grind, because the market comes back immediately. We've not even got a profit on the table, so I can't even move the stop to break even. So I'll talk you through this. We see them come back again. They bring the market back up to the entry point here. This also fails, and then just to top it all off, we've got the economic news that's going to be released shortly as well. So with that, I get out of the trade just in case it's really bad. So now I'm just teeing up for the news. I can see this is a mile off. I mean, this set a precedent for the rest of the day. You can see the difference between these figures. So not good for the economic sentiment there for the Germans. So once this is released, there's a full picture of the morning session. We had the volatility to start with, and you can see all of these 89% retracements until we broke through here, then coming back and then creating them all the way through here, this pattern, and just coiling itself into a tiny range. So you can see the volatility decreasing there. Now if we're going to fast forward through to the afternoon, and again it was dominated by news. You can see there the market just sitting sideways waiting for the afternoon session. It did break through eventually, as you can see there. That was the pajama traders moving the Dow up, and the DAX following. So let's move on to the start of the afternoon session. The market opens and immediately sells off, as we can see there. The Dow dropped 100 points from the off, and then ended up down 400 at one point, which you saw earlier. So now you can see the market finding some support and is trading in a sideways move. And I expected this to continue like this. But what was interesting here is how prices rallied up to the 20 bar moving average and then came off as well. And I thought, well, that's interesting. There's some weakness around in this market. And again, you can see prices failing to close back above the 20 bar moving average. And once they close back below the 5 bar, you can see prices then moving to the downside. We had the news, and I don't know whether the market was given this early, but you'll see down at the bottom here as I just have a look at this. Whoops, gone too fast there. Far too fast. I'll just bring this up. It's always difficult with so much recorded there. Let me just try this so I can get you the figure. There you go. So we can see again disappointing news, and we've already got the weakness with the Dow, and it didn't take a lot to send this to the downside, and it just continued to move lower. But the key here was this weakness here, but of course we've got to be out for the news anyway. So the close below the 200 MA and the psychological level and below the 5 bar moving average there is an indication of weaker prices. You can see some short covering here as the traders take some profits, but prices continue to move to the downside. I did manage to grab a few points out of this 25 as it made its way down, just waiting for it to rally and then carry the continuation of the short side. But you can see there prices again just coming back, sitting at this support for a moment or two, but then going through it and heading down to the S2, which it does, and then an increase in volume at this point as well. So again, another massive increase in volume there, narrower bar than the previous bar at the S2, which is generally an indication that the down move could be over, and eventually you just see the market increasing in its volume. You see all the way through here, you've got this huge volume as the market is then brought back just back to the BRN at this time, and then just managing to sneak through, as you can see there. Okay, that will do it for this one. It was a good morning. Became a bit of a struggle with the last 3 trades, but the first one 40-point profit, giving up a couple of points in the other long, but picking up a few more in the other short, and then the last long also giving up a few points there as well, as it the news was approaching and the market struggling to break through. Okay, that's it for now, and as ever, thanks for watching. See you in the next one.